Hey folks, Dan Frio here. I want to go off script a little bit today. What I want to talk about today are those that are sitting on the sidelines, just don't know what to do. You truly don't know what to do. You're like, I'm watching my rent kind of just get thrown away. My rent payments are going up year after year, might be in the tune of 10%. But on the flip side, the housing market. The housing market, houses are the highest they've ever been in history. Mortgage rates are at a 4-decade high. So I'm kind of stuck between a rock and a hard place. Well, let me maybe help you analyze just some things, okay? So let's dig into what the housing market's doing, and then I'll give you my true feedback. And then let's go over to where mortgage rates are. You might get surprised there with what's going on in the market, since all the headline news, and we know the Federal Reserve is out and they're raising rates, and they're out to really crush the housing market. But is it working? So let's loop all this together to maybe make your decision maybe a little easier, or at least put some thought into your mind saying, never looked at it that way. So let's get to it. The first piece of the puzzle is housing markets are crashing, or they're going to crash. And we've now heard that for about a year and a half. So will it eventually come true? Well, yeah, houses at one point in history will go down. When that is, I don't know, but it doesn't look anytime soon because of a lot of factors in there. And I'm not going to get into it. You guys have your own conspiracy theories, or you look at the facts. But let's just go in and dive into the numbers just a little bit. CoreLogic just came out and said prices from June of 2021 to June of 2022 are up 18.3%. Okay, so let's dig into it a little bit further just to say, what are they doing recently? Well, you go down through here and it continues to tell us that housing prices continue to go up and up and up, if you like it or not. They are starting to cool down a little bit. You don't have the robust, 1, 2, 3% a month. It's now getting to the point it's down through here. Look, a month over month, it's up 0.6%, getting a little bit normal, but still not there, okay? But it's coming back. This doesn't say negative. Okay, it's coming back quite a bit. So until this gets to minus 20, I'm not going to worry about housing prices, because I still think there's a big fuel for housing and there's limited supply. And again, you guys have your own theories on that. The next piece of the puzzle is what's going on with mortgage rates, because that's the one piece of this puzzle that really puts these payments out of whack for you. Well, let's get into the dynamics of everything and what's truly going on with mortgage rates. Well, the stock market's not doing well today. One of the biggest reasons is Pelosi's going to Taiwan, and it's causing catastrophic news and interruptions throughout the whole world, because people are like, okay, we know there's a Russia-Ukraine conflict. We know China is now, teetering on the brink of Taiwan, but because of the uncertainties in the market, you're starting to see a lot of people moving their investments into a risk-off position. Okay, so let me explain this to you for a little bit before you start really bashing me on the politic piece of this. Is what's happening around the world is there's confusion, there's interruptions, there's chaos, there's concerns. So people aren't feeling as good about investing in companies, okay? When you invest in companies, normally you're investing in their stocks. All right, so because of everything that's going on with the world right now, especially current situations, a lot of investors are saying, I'm just gonna come up and risk off right now. So what exactly are they doing? Well, they're selling stocks, and they're putting money into the safest places they can think of. One, what country would be the safest? Well, the US. Okay, the next piece of the puzzle is, where is a solid place I can put my money with a return that I'm not going to get clobbered. I'm not going to lose 50% of my investments. Well, the bond markets. Then when you dissect the bond markets, you have corporate bonds, treasuries, and mortgage-backed securities. So this isn't an economic test. I'm just explaining to you guys where people are moving their money and why what's happening with mortgage rates are what's happening. Okay, so a lot of people are electing right now because the treasury yields aren't that great and they know they're coming down. Well, they're just deciding to buy mortgage-backed securities, okay? What's happening there is they're driving up the prices of mortgage-backed securities because of the demand, and the yields, or the mortgage rates, are dropping. Well, did you realize since June 13th, mortgage rates in almost every category is over 1% lower today than where we were just couple weeks ago. Again, it was June 13th. So that's what's happening. So I got a homework assignment for you. One, if you've been on the fence and you're like, I don't know if it's a good time or not, but let me stick my toe in the water. Well, what I need you to do is call us, and I'll have all my information down below, and it's posted all over this, and I'll give it to you at the end. Just to kick the tires to see where the numbers look like, or what do the numbers look like in regards to the price or the value of the property that you would really like to get into. Okay, that's number one. The biggest piece of this puzzle for those out there that are already in contract, if you're building a house or buying a house, you've probably called in a lender and actually at this point said, okay, I know rates are just keep going up and up and up. I'm going to lock in. Well, if you go back to that lender, here's what's going to happen. They're going to tell you, we can't do anything about it. You're locked in. You can maybe pay a fee. You can buy it down to where market rates are, but it might cost you $5,000, $10,000. So now what do? Well, the best idea I can give you is email me. Okay, what I can do is I can show you what mortgage rates look like for your scenario, your exact scenario today, right when you email me. So all I need you to do is email me what's called your loan estimate. Okay, the loan estimate is a form that your mortgage lender has to send you out. They have to legally send this out to you within 3 business days of pulling your credit. And it's going to tell you a bunch of stuff. It's going to tell you your property address, the value of the property. Then it's going to go over to the loan amount. It's going to give us the rate, and then it's going to give us all the fees. One big piece of this is going to also tell us if it's locked in or not. Okay, so that's what I want you to send me. But the one piece of the puzzle that I didn't mention in there is your credit score, because your credit score is not a part of the loan estimate. So if you would email me your loan estimate, but in there, what I need from you is let me know what kind of property it is. Is it a single family, a duplex, a condo, whatever it is? And then what is your credit score? Okay, just give me within the hour, I'll send you back a customized quote for exactly what you can get right now today. It only takes us a matter of maybe an hour to get your application in, get you locked in, if we can come back and give you a much better terms than what you have. Okay, so that's my analysis for today. For those out there that are sitting on the fence saying, okay, I would love to buy, but I just can't. Maybe this is a little reprieve in the market for you. And also another good caveat in all this is you don't have the bidding wars out there that you've had in the last year or two. I'm talking to realtors every day, and what they're saying is instead of giving 30, 40, 50 bids on a property today within 24 hours, we're getting 2 or 3 within 2 or 3 or maybe a week. So that's now starting to put FOMO on the side of the seller because they're looking to get out at a market high. So based on all this information, what I want to caption on right now is where are mortgage rates? So let's get over to it. The first thing we watch on here is the MBS market. What the MBS market tells me, it's basically the bond that trades on Wall Street that's yield is the biggest component of your mortgage rate. So let me explain how this works. This is the mortgage-backed securities market. This is the price of that bond that sells out there. So what happens is mortgage lenders package up all these mortgages into a bond and they offer it on Wall Street. And here it is. When this price right here, when this price goes down, mortgage rates go up. Well, if you see down at the bottom, you can see within the last couple weeks, we hit a bottom and we've really spiked up fast. Thus, we now have rates 1% lower than where we were. Okay, so there's this isn't a good day today, but if you see down through here, we've had an exceptional couple weeks. So now let's break down to where mortgage rates are. Okay, so what I do is I show this every day. This is what Mortgage News Daily posts on a daily basis. This is no particular person's rate for an individual lender. Basically, here's what happens is Mortgage News Daily sends out a survey to lenders all over the country. And it says this: if you're looking to buy a $500,000 property and putting 20% down with a 740 credit score, and it's a single family home that's going to be your primary residency, what would the rate be? And lenders send in their information on the top 6 products, and here they are. So we go through this, and here's what it shows: the 30-year fixed, the 15-year fixed, 30-year jumbo, the ARM, FHA, and VA. Okay, so we're going to focus in on right here, but I'll focus in on some others. But if you look right here, you can see the 30-year fixed rate today in this scenario is 5.05. It's down 8 basis points, or 0.08 from where we were yesterday. But the intriguing piece is here The 52-week high, which was on June 13th of 2022, was 6.28. Today's rate, 5.05. So we're over 1.25% lower today than where we were just a month ago. And you can kind of go all the way across the board here, other than the arms. The arms aren't moving. They're actually going up in some cases. Look, the 52-week high is 5.5. We are currently at 5.2. Why would you take a 5.2 when you can get 5% on a 30-year fixed? So these are where rates are, and I want to show you the difference on where we were just 2-3 weeks ago versus where we are now. So my name is Dan Frio. I do this report every day. If you'd like to find out more about me and my team, or what we might be able to offer you guys, all I need you to do is go to our website. It's therateupdate.com. It's pretty simple. You can chat with us, like Alan's online right now, so you can ask him any questions. If I'm on there, at least say hi. Just come on in and say hi if you see my name. If you want to reach out in other ways to us, you can give us a call. All that information is up here somewhere. And you can even give us set a Calendly event. What happens is you click that Calendly event, you schedule a time, and then we'll make sure that we're there for you to answer any questions either by phone or by Zoom. We love meeting you guys in person. So if you find interest in this video and value, please don't forget to give us a thumbs up, subscribe down below, hit the bell. Every time I post a video, you get an alert. Thanks for watching, guys. I will be on today live at 2 o'clock Central Standard Time. We're going to talk about adjustable rate mortgages versus fixed rate mortgages. And I'm here also to answer all the questions that you're going to have. And I'll do that live at 2 o'clock Central Standard Time. So thanks for watching. God bless. I'll see you then. Bye-bye.